back with Talking Point. Tata Power is a company in focus, in line or slightly better than expected in terms of the Q1 delivery. Large Capex plans for the next couple of years in order to double the revenue size between the next 3 to 4 years. Dr. Praveer Sinha, CEO and MD of Tata Power, joins in to tell us about how the year started and the year-end targets and more. More importantly, what's happening in that space. Dr. Sinha, great having you. Thanks for joining and I hope all is well.
Thank you, Neeraj. Always a pleasure to be on your show, and thanks for the invite.
The pleasure is ours, sir. Can you tell us a bit about how did Q1 shape up? It was slightly ahead of what the consensus estimates were. What stood out for you?
This is, of course, the 19th consecutive quarter of growth in PAT. And I think what has done well is all our existing operations, whether it is our conventional generation or renewable or transmission and distribution, have started doing exceedingly well. Many of the steps that we took in last few years in terms of making a strong foundation on these businesses have started showing results. And with our continued focus on Capex on new businesses, I do expect that our performance will continue to improve in future too. What you see is basically a reflection of a very, very strong foundation of the business. And once you have done that, then it virtually gets on autopilot and you need to just ensure that there is consistency in the performance.
There's improved performance. Okay, I'm trying to break it up into segments. I mean, Discom business, a strong number out there in percentage terms, 34% growth, improved performance in solar EPC as well, and that percentage number looks very impressive too. Is this a sign of what things could look like over the course of the next few quarters, sir?
So it will actually improve our distribution business, which is in Delhi, Mumbai, Ajmer, and Odisha, have done well. Normally, the first quarter is the most difficult quarter, considering the heat wave, where many of the things that we carry out, whether it is in terms of reliability or billing and collection, gets a little impacted. So you can definitely expect that the second, third quarter will be much better than the first quarter. Similarly, our renewable business, we could implement some of the projects, the EPC business. We also have a very good pipeline of nearly 8 gigawatt, out of which 5 is our own utility scale projects, and 3 gigawatt is third-party EPC. More than 3 gigawatt will get implemented in this financial year, and I expect about more than 4 gigawatt to be implemented in next financial year. So everything is lined up. We have set up our manufacturing plant, so the cell and module that we will manufacture in the plant will be used for these 8 gigawatt projects. So I think what you are seeing is that there is a huge amount of consolidation that has happened in all our operations. And the results are there for us to see that our consistent performance is happening. So I feel very confident that we will continue to do exceedingly well in coming quarters. And we will surprise everyone with our performance.
Okay. Since you would have paucity of time, I will not go into individual segments, but try and get the bigger picture from you, sir. When you say that you will surprise people, the expectations are that over the course of the next few quarters, albeit the next few years, your EBITDA growth could be as high as 20%. Now, is it possible to surprise on estimates which are of such a high magnitude any which ways, Dr. Sinha?
Well, in last 4 years, we've more than doubled our revenue. Our EBITA has gone up, is 1.5 times. Our profit is 3 times. So I think our results speak for themselves. And you will definitely see that many of the things and initiatives that we have taken, the results will start coming in the future quarters. So I won't give a number, but yes, we will continue to do exceedingly well as we have been doing in the last few quarters.
Okay, I'll not ask you for a specific number on a quarterly basis, but I presume you've officially given a target of doubling revenues from FY23 to 27. With the capacities coming on stream, sir, would you believe that that is something that is a cakewalk, that is something that is eminently doable, or that is something that is aspirational?
There is no cakewalk in this. There is a lot of hard work. And mind you, we are a public utility supplying power to consumers 24/7. So there's huge amount of hard work, even in such hot conditions where we had a very, very difficult summer. So, but yes, this is the aspirational number for us. And we definitely meet whatever aspirational numbers we have set for ourselves. And in fact, we end up doing little better than the aspirational numbers.
Sorry, I by no means was saying that the work is a cakewalk. I just thought with the work that has been put in, are the targets a bit of a cakewalk? That was what I was trying to imply, Dr. Sinha. I have last two questions, sir, because I understand I have to let you go. But the first question is on the space at large. Very tall targets across renewable space in particular, but presumably even otherwise. I mean, wind, solar, hybrid, thermal, very tall targets for India as a country. I would love to understand, is the opportunity size right even for a large player like you to have sizable expansion plans? Because when I look at the Capex plans that you have, 20,000 crores for FY25 and 26 is no mean feat. That's a fairly large Capex that you are putting behind your growth plans as well.
I think the demand of power is definitely there. We have seen consistently in last 3 years 10% CAGR, and I think this is only getting enhanced. One is because the country as such is doing very well, whether it is in its industrial production or otherwise also the aspirational Indian in terms of the electronic and electrical goods that they are purchasing and using. The second is the climate change is also impacting, where we saw this year record high temperatures during the summer months, and thereby that much more increase in energy consumption. So both these factors put together, the demand is definitely there. To meet that demand, the growth has to be done. And for us, our per capita consumption continues to be very low compared to any developing country or even the world average. So I think we will be required to do this to meet the energy security. And as a large company, we have already identified a huge Capex year after year. We're talking about nearly 60,000 in 3 years. This year, we have planned 20,000, out of which we have already implemented 4,000 in the first quarter. So you will only see that this will get enhanced. You have seen that not only we are growing in our renewable space, but in our transmission business, and also in our hydro business, where we have 2,800 megawatt of pumped hydro. And we announced yesterday about our intention to develop a 600 megawatt hydro plant in Bhutan with Drup Green. So I think we will see huge capacity additions taking place, and Tata Power will play a very, very important role in all these sectors, whether it is in generation, transmission, distribution, or renewable space and hydro space.
Remember, viewers, over 50% of the Capex allocated to renewable, 30% to transmission, 10-15% to new areas like pumped hydro as well. Keep up the great work, sir. Thank you so much for talking to us, and all the best for the quarters ahead.
Thank you. Thank you very much, Neil.
The pleasure was ours, and viewers, with that, it's a wrap on this leg of Talking Point. Thanks so much for tuning in.